Hi guys, it's Stock Curry, and there's a lot that you need to know before the markets open on Wednesday. We're going to talk about the Fed meeting, we're going to talk about earnings, we're going to talk about more signs that a market crash is coming up, and I've also got a few stock picks for you. So let's get into it. Okay, the first thing that you need to know for Wednesday is that the Fed is speaking on Wednesday. Now, they're wrapping up their meeting that they had Tuesday and Wednesday, and we're going to get a press release from Jerome Powell on Wednesday. Now, I don't expect the Fed to make any policy changes this month, but what I'm looking for is any information on whether they'll be cutting back on their bond buying anytime sooner than expected, or if they're going to be raising interest rates any sooner than expected. If the Fed says that inflation is higher than they thought it would be, that's going to be bad for the stock market, because that means that the Fed is going to have to raise interest rates sooner than they want to do in order to combat the high inflation. At the same time, if the Fed says that they're concerned about the new Delta variant and how that might affect the economy or affect the reopening of the economy, then that could also be bad for stocks, because that means that growth just isn't there, the economy isn't doing as well as we thought it would, and that could also cause the stock market to go down. On the other hand, if the Fed reiterates their current stance on the economy and they don't see any warning signs in the economy, then that will be good for stocks. It could also cause the 10-year Treasury to drop even further, which is going to be great for high growth stocks. The next thing we need to talk about are earnings. Now, on Tuesday, Apple, AMD, Google, Microsoft, and Starbucks all reported earnings, and across the board, they blew earnings out of the water. Earnings were really great, and we did see AMD, Microsoft, and Google all up about 1% after hours. Apple and Starbucks, on the other hand, both fell 2% after hours. Now, this is really concerning to me, because I really would have thought that given the huge earning beats, that we would have seen these stocks rise a lot more than 1%. So really, I mean, especially given the fact that these stocks were down pretty much all day on Tuesday, it really just is not good after hours action for companies that are beating earnings. I mean, on the daily charts, these companies are overbought. They are due for a pullback. And despite the earnings beats, it still looks like these large cap stocks are going to pull back. So just be careful of that, because when large cap stocks pull back, that in turn is going to draw the indices overall down. And speaking of stocks going down, we are getting more signals that a market correction and possibly a crash are on the horizon. We had another big red day today. Whenever we get volatility in the markets, that is, the markets move up or down more than 1% day to day, that is often an early warning sign that a correction or crash is about to happen. The other thing to look at are the Asian markets. Now, the Asian markets will often sell off before the US markets do, and lately the Asian markets have been getting absolutely crushed. Hong Kong's Hang Seng Index is down more than 8% in the last 2 days alone. Chinese stocks are also down, and that is affecting a lot of the high growth stocks that retail traders are invested in, such as NIO and Alibaba and JD.com and stocks like that. Now, another thing I look at to determine when a market correction or market crash might happen are valuations. And right now, valuations, especially on large cap stocks, are very high. The PE ratios are incredibly high, and the RSI is also pointing to overbought. So that is another indicator that we're about to get a correction or a pullback in the markets. Now, even though we have a lot of signs that are pointing to an upcoming market correction or market crash, I want to be clear that you cannot time the market. Nobody knows when the next correction or crash is going to come. It's possible we look back on this period and we say, wow, there were so many warning signals. Everybody should have known that a huge market correction was going to come in August or September of 2021. On the other hand, we could look back at this time period and say, oh, everybody said the market was going to correct and nothing happened, so don't worry about it, this time. And so I don't know what's going to happen. Nobody knows. All I can say is we have a lot of signals and a lot of signs that are pointing to an upcoming market correction or market crash. So what I would do right now is I would just start preparing. I would maybe think about selling some of your large cap stocks that are at all-time highs right now, sell them right now, and then also maybe start loading up on some cash. If you sell those, don't rebuy something else, just put your money into cash. Another thing you might want to start thinking about doing is some hedges. Think about things such as SQQQ, UVXY, things like that. One warning about hedges, though, is just be careful because these are designed to go down over time, and so I never recommend holding a hedge longer than about 1 week. Another thing that you could do that might help you out a little bit longer term is to sell some vertical call spreads. Vertical call spread options make money when the market goes down. Now, again, you can't time the market. Nobody knows when this is going to happen. So in summary, just don't panic, but do prepare. Just take this time to start closing out some of your stocks that are at all-time highs, and take this time to start loading up some cash so that you can buy the dips once the market correction is over. Okay, the last thing I want to talk about before we get into our stock picks is a little bit of training. Now, if you're a new investor and you're trying to learn how to invest in the stock market, you're trying to figure out how to invest profitably so that you're not just constantly losing money, I recommend you take a trading course. And by far, the best trading course I found is something called ZipTrader U. Now, I reached out to ZipTrader and I negotiated a 15% discount off of ZipTrader U for you. That's actually better than what ZipTrader is offering his own viewers right now. So what I would recommend is if you're trying to learn how to trade, you want to learn how to trade profitably, go check out ZipTrader U. I have a link for it in the description of this video, along with the instructions on how to get 15% off. The other thing I'm looking into right now for you guys is possibly a Discord server with a whole bunch of analysts and other people that can jump on there, say 24 hours a day, and just help you out anytime, day or night, where you can just get together with people and learn about stocks and options and crypto. I do have a Facebook group right now that is completely free. If you want to check that out, it's facebook.com/group/WeProfitDayAndNight. But I'm trying to find something, even if you don't have to pay, just trying to find something that we can bring in a lot of other analysts that can get on there and be able to help you out right away. Because I'm not always available. Sometimes I'm doing other things, or I'm, sleeping sometimes, or I'm watching videos, or I'm doing my own trading, and I'm not always there for you guys throughout the day during the market open hours. And so hopefully I can find something for you guys where you'll be able to get help right away, immediately. If you're like, hey, what do you think about this stock? Somebody might be able to jump in and within an hour just answer your question. So that's what I'm looking for. But for the time being, you can go to the We Profit Day and Night Facebook group, which is completely free. Yeah, go over there, sign up, join, and post whatever questions you have. And we have a lot of great people in that community that will help you answer those questions. We've got almost 2,000 people in that group already. So it's amazing. It's going great. Okay, guys, let's get into our stock picks. Now, for those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every day, I watch hours of videos from the top YouTubers, and then I consolidate all of their stock picks into a single video. I give you the cliff notes on their stock picks, as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Okay, before we get into our stock picks, I just want to remind everyone that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. Now, if you're wondering what you're looking at right now, you're looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $2,300. And if you're not a U.S. resident, or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. I have a link to Interactive Brokers in the description of this video as well if you'd like to check that one out. And just a reminder, I do have material connections with both Webull and Interactive Brokers, so when you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Okay, let's get into today's stock picks. And the first thing we're going to talk about is Bitcoin. The traveling trader thinks this most recent run-up on BTC is actually a dead cat bounce. He sees a lot of similarities between the chart now and the chart back in 2017 and 2018. We'll have to see if this is in fact a dead cat bounce or the start of a new bull run. Given how many countries are jumping into the blockchain bandwagon though, I do think the environment today is very different than it was back in 2017 and 2018. I'm still leaning towards a new bull run, but the similarities in the chart patterns cannot be ignored. As of the recording of this video, Bitcoin was back over 40,000, so that adds weight to this being a new bull run. And next up is AAPL. This is Apple. The traveling trader said that AAPL always beats earnings. The problem is that AAPL drops after earnings 75% of the time. And in fact, that's what we saw with AAPL today. The traveling trader recommends waiting for AAPL to drop further before buying in. AAPL usually bounces off of the 100-day EMA post-earnings. Therefore, I'm going to reiterate my $140 buy-ender price and my $135 ideal buy-in price. I am going to lower my stop-loss price down to $125 just in case AAPL pulls back too much for a day or two. And next up is AMC. This is AMC Movie Theaters. Keenan Grace let us know that the SEC announced that they had charged 27 firms for failing to file their customer relationship summaries in a timely fashion. The Customer Relationship Summary, or CRS, is a new form that the SEC required starting 2 years ago. The SEC gave broker-dealers 2 years to complete their form and deliver it to customers by June 30th of this year. None of the 27 institutions charged yesterday filed their CRS forms by the June 30th deadline. Now, missing the CRS form deadline in and of itself is a minor infraction, but it is a sign of a larger issue in that the SEC fines are often so small that institutions just ignore the rules. And we're not talking about just a few institutions here. We're talking about 27 brokers and advisory firms who ignored the June 30th deadline. Keenan Grace and others are concerned that large institutions are just going to ignore other rules that are put in place also, like rules designed to stop naked shorting and make the markets fair for retail investors. So the concern is that even if the SEC steps in and creates new rules to help out retail investors, that large institutions are just going to ignore the rules. It looks like the real problem is not the fact that there aren't enough rules, it's the fact that the fines are so small that large institutions are ignoring the rules. Next up is AMZN. This is Amazon. The traveling trader said that while AMZN almost always beats earnings, the stock price almost always goes down after earnings. Only 1 out of the last 6 times did AMZN rise after earnings. Now, AMZN doesn't report until Thursday after the close, so you still have time to set up a play if you want to. The one thing that does make AMZN a little different this time is that AMZN just broke out of a year-long consolidation pattern. So AMZN might not follow history this time and might actually rise after earnings. It's really hard to say. The traveling trader is planning on playing a neutral position on AMZN earnings. That means he's looking at opening an Iron Condor option or something similar. Next up is CHPT. This is ChargePoint. They are the largest charging station company in North America with 73% of the total market share. They are also starting to expand globally. Chris Zane likes CHPT at the current price, and I do too. It looks like it might have found a bottom at around $22.50. The MACD histogram is rising, and the RSI remains very close to oversold. CHPT might drop a little bit further, but I do think this would make a great swing trade as well as a great long-term hold. Next up is CLSK. This is CleanSpark, and they're a solar energy company. Chris Zane said CLSK is in a buy zone. Now technically, CLSK is showing divergence. The RSI and MACD are both rising, and the MACD is about to form a golden cross, but the candles are dropping. When you have divergence in the technicals, the candles will almost always catch up to the RSI and MACD at some point. So I really like the idea of buying CLSK here. CLSK reported a profit last quarter, and if they can report another profitable quarter, then the stock price should do really well. CLSK is expected to report earnings on Tuesday, August 3rd. Next up is FTNT. This is Fortinet, and they're a cybersecurity firm. Tom Nash first covered FTNT back in February. The stock has run up massively since then. FTNT is up over 100% over the past year. Tom Nash now feels like FTNT should be valued at around $260. It's currently at $271. So Tom Nash thinks it's time to sell FTNT and move on to another play. If you want the details on how Tom Nash came up with this valuation, you can go watch Tom Nash's video that he uploaded Tuesday. Next up is JMIA. This is JMIA, and they're an African e-commerce company similar to Amazon. Chris Zane said JMIA is in a buy zone. JMIA is approaching oversold in the RSI, and the MACD histogram is rising. Those are both good signs that a bottom is near. My only concern is that the candles are still below all of the EMAs. Longer term, JMIA is very bearish. On the weekly chart, JMIA is below all of the EMAs and the MACD is still dropping along with the RSI. And on the monthly chart, the MACD histogram continues to fall along with the RSI as well. And the candles are below all of the EMAs on the monthly chart too. So technically, JMIA is very bearish on the weekly and monthly charts, but does look like it might be near a bottom on the daily chart. I would personally recommend waiting a few more months before buying in. I think JMIA might be a better buy in October or November. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. StockMo feels like $38 is the bottom for NIO. The 200-day EMA is at $39, and that's pretty much where NIO closed on Tuesday. We'll have to see if NIO bounces from here or if it continues to drop. If NIO continues to drop, then it looks like $35 will be the bottom. Today was an anomaly technically, so it's really hard to say if NIO has bottomed out or if it will start going back up. And last we have PLTR. This is Palantir, and they're a data analytics company. Chris Zane reiterated his $18 ideal buy-in price on PLTR, although he said buying in the $20 to $21 range would still be good. I will reiterate that I do not think PLTR will drop down to $18 again. I will reiterate my $24 buy-ender price, my $21 ideal buy-in price, and my $19 stop-loss price. Okay, I hope you enjoyed this video and get a lot out of it. If you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $5, Webull's going to send you 2 free stocks worth up to $2,300. They're also going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.